So will Bitcoin manage to break through its major upside resistance today before the major CPI data does come out tomorrow? Well, we're going to find out in today's show. I have a whole lot of information which we have to cover. I do apologize for moving the time back for those of you who are waiting live over here. I had an important video that I had to sort out the sound quality for, and I can promise you it's going to be worth it. So just stay put and we'll get straight into it. You can see by the crypto bubbles chart over here that a lot of coins, again, on the hour at least, are starting to turn green again. On the day, most things are green. Couple that are still need to accumulate off of their next higher lows, which seem to be pulling back. And it looks like the market will want to have another crack to the upside. So we'll cover those levels. We'll see on the lower time frames what is the next upside target, and then also take a look at the high time frames for a bit of perspective. And then I have one potential altcoin chart, which I do want to show to you, which could be a building narrative leading into the next couple of weeks. That is, of course, only holds true if Bitcoin manages to crack through its major upside resistance. So starting off over here with CryptoCon. What a name, what a Twitter handle, the CryptoCon. He says here that the Bitcoin bear market may be over sooner than you think. BTC 60-day volatility has reached its lowest level in 4 years. In the past, this comes right before a major price move, with indicators and charts primed in the buy zones. The bull market could be days or even weeks away. And there you have it, extremely low volatility. I do have a chart on my own, which I'll show you in just a second's time on that. And Will Clemente says the heavy sell pressure from the Bitcoin miners that has barraged the market for the last 4 months has finally subsided. And you can see that miners are not selling as hard anymore. They are turning the machines back on. And here you have it, is my Bitcoin volatility chart. I've shown you guys this with a zoomed in approach, but today let's have a look at it over here. Just as a reminder of where the market was back in 2018, this led to a drop down. So this is important to show you. Just because volatility is incredibly low and at levels not seen since 4 years ago does not mean that the move or the expansive move will necessarily be to the upside. If we clear and we break high time frame structure, which you guys know is 21,500. You break 21,500, you clear the high time frame resistance out, and then this expansive move can go to the upside. But back in 2018, when volatility was this low, price actually went down from $6,500, as can be seen here, all the way down to 3,200. And then you had another area of very low volatility, which was in July of 2020. That led to the run up from $9,000 up to 13,200. We then contracted again a second time, and we expanded from a price point of $13,200 on Bitcoin, which led to the mega rally all the way back up to the all-time high. So zooming in, you can see it's very simple to see. Those are the levels, tight Bollinger Bands. Volatility is lower than it's ever been, especially when you compare it with the VIX, the volatility indicator for the S&P 500. Here's your gray box, strong area of resistance, $19,000. Main level to clear continues to remain this. You need to break above that. Until you do that, not much is going to change for the high time frame. But I do have still hope on the low time frames, which I'm going to show you in a moment's time. Then one of the biggest indicators that I can see, which is starting to turn at least towards the upside, is the weekly RSI. You got the orange trend line, which has been holding and governing the RSI down lower and lower ever since we set in that all-time high. And that was on the 4th of January when the RSI started to turn, and pretty much it's been down ever since. What I love about this is not only do you have the white RSI, which is the actual RSI, breaking through that trend line, but you have the yellow moving average, which is also starting to cross back above. So this can seriously change the momentum within the market. But as you would know, with every other time, you have to wait for confirmation. If you're a high time frame trader or an investor, you want to wait to see how does the week close. Because if prices nuke from here and go to the downside, then this would not look the same on a weekly close. Pretty much these bands would turn back down and come back with inside this trend line. So wait for the weekly confirmation before you front run any of these ideas. At the same time, in order to break that high time frame price structure, which as I just showed you is going to be the level over here, that 20,500, that would be enough to probably close those RSIs anyway outside, and then you know that things are changing and now we need to really start to pay attention. It doesn't change the fact though that the moving averages are all going to act as resistance, and for a long time price has been stuck below all those important ones, the 200 MA as well as the 255 MA. Major resistance is also lining up. That $18,000 to $19,000 underside resistance does also line up with the 21 exponential moving average. That has been one of my favorite ones to govern pretty much if you want to make things very, very simple and you just put on a weekly time frame. Generally speaking, it's not the only thing that you would use, but if you want to make it simple, generally speaking, price stuck below the 200 exponential moving average, the yellow one, has and with that moving average specifically angled to the downside, means you remain in a bear market. When it recaptures it and price is above it, and it's especially important to know that when it's angled to the upside, generally you've been in a bull market, as you can see over there. So that's what I'm watching on those charts. That would also coincide with the break of this trend line over here, as well as the Lucid SAR. This is something that I showed yesterday. Each and every passing week, the Lucid SAR will continue to print lower and lower, which means from a timing perspective, it's just a matter of time before we will start to break these Lucid SARs. Once you break the Lucid SAR, momentum shifts, and then either you re-establish an uptrend or you will consolidate sideways, and that would be a good accumulation zone in the long term. So no need to front run anything. Wait for confirmation. There's a lot of things that are coming into play, but according to Lil Moon Lambo, this is the video that I've been waiting to show you. The bull run is back. Okay, so there's a little bit of hype for you for today, but this is on a serious note. I wanted to bring this up because this is kind of how the market starts to behave when you approach the strongest levels of resistance. And I always find it very, very fascinating from a human psychology perspective, how at the time when you should actually be the least bullish, when you should actually be selling into resistance, they pump it, they buy, and bull market is back. So I encourage you guys as intelligent viewers, which I know most of you are, if not all of you are, especially if you're around this long, you're probably an intelligent investor, intelligent trader, then just be a little bit patient. Just wait. You want to buy support. We bought support. Support was around 16K. I told you guys to buy it. You had a free ride up to pretty much where we are now. And now you need to remain patient, starting to play on the side of caution between 17,500 and 19,000. Once you get into those zones, that starts to become dangerous territory where major rejections can take place. This is not the time to be acting like this. But if we do start to break above that 21,500, then I think I'll start to play this anthem myself. So with that being said, what could change this? What could be a catalyst? Well, none other than tomorrow we have the CPI month on month and year on year and the core CPI data, which is coming out. And that is essentially the economic data whereby they show by is inflation getting back under control. The lower that number comes in, the better. And let's have a look over here. The if you have a look at the chart at the moment, so forecast and previous, so we have over here, they're forecasting 6.5, 7.1% was the previous. If we get anything under 6.5 on the yearly CPI, pretty much that would be astronomical. The market would definitely rally off of that. And alternatively, if we get anything above the expected or forecasted 6.5%, then you can expect that the market is going to go down. So you want to keep a close eye on that leading into tomorrow. That is coming up at 8:30 a.m. I believe that should be EST time. Okay. Zero Hedge over here says because Powell did actually speak yesterday, but it wasn't with relation to inflation, although of course the journalist probed him with questions around that, and he said no monetary policy comments from Powell. All this excitement for nothing. It really was a nothing burger. So the current expectations, according to Charlie Bellelio over here, for the path of the Fed's fund rate, and here he shows that pretty much how inflation is coming down. He says the Feb 2023 25 basis point rate hike took it to 4.5 to 4.75%, and then March 2023 another 25 basis point rate hike would take it to 4.75 to 5, then possibly a pause, and then rate cuts start in December 2023 and continue to 2024. Now, what I wanted to show on this chart over here, because this is obviously a projection chart of where they see the Fed funds futures rate to come down to. Ultimately, you need to keep in mind that the Fed will continue to raise interest rates until such time as inflation goes below their target of 2%. And the reason why I say below 2% is because obviously once they pause, then inflation will start to pick up again. So they want it below 2%. So when it does pick up again due to the pause, or potentially even maybe they're going to stimulate the market again, then the mean will revert back to 2%. And that's actually what they're looking for. And that means that you need to position yourself with in mind that the Fed could continue to raise interest rates for much longer than you actually expected, and therefore there could still be a lot of sideways to potentially even down price action ahead. But with that being said, I don't worry too much about these metrics. I look at them as just interesting data points to add to my toolbox of trading and investing. At the end of the day, my ultimate source of truth is the trend. I follow the trend, and that is it. The trend is your friend until the end, and it's your best friend with that being said, because it's always better, in hindsight, you can always look back and say, oh, okay, this and this happened, and therefore that's why the market went up. But if you just look at the price action will show you beforehand what the Fed is actually going to do. And therefore, if Bitcoin does break structure to the upside and the crypto market looks primed to rally, I'm in. I'm jumping in. It doesn't matter what's going on with how long the Fed is going to be raising interest rates for. I literally don't care. I am a price action trader, and that is how I make my decisions. So looking over here at the ES1, which is the S&P 500 futures chart, what I see happening over here, at least depending on how the Fed reacts, if everything goes according to plan, my expectation is that this will most likely remain in a range, and this range could hold for quite a long period of time. The range that I have currently is set between 3,500 and up to 4,100, which is quite a big range. I would narrow that range down further, looking at the mid-range and the upper range as the most likely area that the S&P 500 is going to interact within, which is this area and this area over here. So I believe they will oscillate within these zones, and that creates a great trading opportunity. Pretty much, you want to sell anytime you're at the range high, and you want to buy anytime that you're at the range low. The mid-range of this greater range that I've just shown you also happens to line up with the 0.382 fib level at 3,800. And that's if you took a fib from the ultimate low on this chart. Let's go on to the daily just to show you that. That also lines up with if you took a fib from the ultimate low in March to the ultimate top, the final target continues to remain the 0.618. That does not mean that in the interim you can have bear market relief rallies. That is a real possibility. And based on what is going on from a macro standpoint, I personally think that we're going to oscillate within this zone, at least until the next major Fed meeting, which I think only takes place at sometime in Feb or March. So keep a close eye on that. If you do want to trade the S&P 500, one way that you can do it is on Prime XBT. They are one of the sponsors. I do use it myself. I've used it for the good part of a year. I vouch for them. Have a look in the link in the description below. You're welcome to click over there to sign up. It will take you through. Here you go, Prime XBT. You get $7,000 or up to $7,000 sign up bonus if you do use the promo code Kyledoops. You'll have to physically type that in. Okay, moving on. A little bit of negative news, at least from Dylan Leclerc. He says here, heavy hitting stuff. Cameron Winklevoss is accusing Barry Silbert on multiple counts of fraud and calls for his immediate removal as the CEO of Digital Currency Group. So you would think that that would mean that would affect the GBTC premium. But interestingly enough, the GBTC premium actually seems to be closing in. You had a big spike over the last couple of days. I would treat this similar to the way that I treat a trading chart. And if you are somebody that was looking to potentially get Bitcoin at an extreme discount through this Grayscale Bitcoin Trust, I would wait for this to establish a little bit of an uptrend, call this a little bit of a higher high now, breaking some resistance, wait for the pullback. I do expect that there will be a little bit more of a discount again. That could potentially give you the opportunity to get into GBTC. I think it's a risky, dangerous play. I know that Run himself actually took a trade on this. If you want to diversify and take on a bit of risk, go for it. They say that it's very, very unlikely that this discount won't eventually close because they will convert it into an ETF. But I don't like to have too many moving parts when it comes to my trading. I think it's better to just buy the actual Bitcoin that you can put on a hardware wallet. So that's my 2 cents. Hull Press over here says that importantly, though, the 1.1 billion promissory note is not callable and does not contain any other similar features of a callable bond. So very, very interesting. And Gemini is now terminating their Genesis loans, officially ends their earning program. So their yield earning program that they offer on the Gemini platform. They were getting that yield through their relationship with the GBTC, through the premium on GBTC. And that's no longer going to be the case because obviously they're closing it and they're calling out Barry. So a lot of drama in our very own crypto industry over here. 4-day chart, same thing over here as yesterday. Price continues to gravitate up towards this area. Pretty much if you are holding longs, I would still hold my long. I wouldn't close the long yet. This is where I would really start to consider closing the long between 18,000 and 19,000 within this box over here. You might spike above the purple long-term moving average, which is what's happened a couple of times before. You can see it over here. Let's see how many times it happened around here. Here you had a little bit of a fake out. Well, big fake out. That was when price went up to 48,000. So there is a possibility that you see something similar over here, but the underside resistance is going to be a strong level. Once you start to hold above this, if Bitcoin can start to get above this, everything begins to change, and I will definitely start to look to position myself into longs. But we're not there yet, guys. You have to remain patient. Definitely the patient trader is the one that gets paid the best. So continue to remain patient. Okay, inverted chart I showed you yesterday. There's the price labels. I put them in for you. That's where you're meeting resistance. First level, 17,800. Next level, 18,500. Those are the zones. And then you can see finally the Fisher distance from the EMA has come directly into that zone. This is also where I said start to pay attention that this could start to turn over. Earlier this morning, the blue was actually crossed below the yellow, but price is obviously pushing up again, and hence it's trending on upwards. But once you start to reach this 4.3 level, at that point, 4.3 coinciding with price pushing into this box over here would be a very, very strong sell signal for me. I would be definitely taking my profits on any longs, of which I'm not participating in. Remember, I showed you on the previous show, I missed my long opportunity narrowly. Didn't spike into my buy order, so I've been sitting this one out. I was on vacation, not actively trading, and I'm just waiting for the next best setup. Once that comes, I'll take the next trade. So Westy over here shows the flippening that no one is talking about. Now, this is an altcoin that I think could potentially become a little bit of a narrative. So I thought, let's take a look at it. And it is Optimism. So Optimism is overtaking Arbitrum for daily active addresses and transactions per day. And he says here, very, very interesting. So there you have it. I'll show you the metrics myself in just a second's time. And then you have this article as well. Arbitrum and Optimism transactions now exceed Ethereum mainnet. So these layer 2s are where the transactions are taking place. And maybe it is going to be a future of side chains, where the side chains are where most of the transactions take place. And I thought, well, let's look at the chart and a little bit of the tokenomics. Not something that I usually dabble in, but I think let's do it today. So Optimism chart, first and foremost, I'll say it is in a semi-uptrend, but there's not that much price history over here. As you can see, the chart only begins on the 1st of June, 2022. So ready to make your decisions on this makes it a little bit more difficult, which means that you probably want to treat this more as a trader and not an investor. And there's more than one reason why I say that. I'm going to show you in a second's time from a tokenomics perspective as well, why you probably want to look at this more as a trade opportunity. So first and foremost, uptrend over here, price stuck above this area. This is definitely the critical support zone, but you don't want to wait that long. That's very, very far away. I would wait for a pullback in this. If you start to see price pull back, and these are the zones that I'll be looking at, if you can see price come back anywhere into this area over here, the top of, call it what would look like a bit of a triangle, then you can start to pay attention, look for where the next higher low may be set. You're going to have to go onto a low time frame. I'm on the daily now. Then you're going to drop down onto maybe a 12-hour or 4-hour chart. So something like this, dropping down onto the 4-hour chart, pullbacks into this region over here. This is a big inefficiency candle. I can already see that. It's already been filled though over here. So you need to take it as it comes. But any price action that comes down towards $1.10, I'll start to pay attention. I'll keep you guys up to date on this. This is one of the coins that's on my portfolio chart for the leading into the next bull run. And the reason why I would treat this as a trade as well is if you have a look over here at the circulating supply on CoinGecko, it's 214 million. So it's quite a low circulating supply for now. The circulating supply changes when there's an unlock. So you want to go to this side over here. It's called token unlocks. You can look at any token in the world that you want, which has unlocks. The next major unlock event happens in 139 days, which is quite a long time away. So call it 6 months or so from now, which means if Bitcoin breaks major resistance levels and we start to go into a major relief rally or potentially even into a new accumulation cycle and a bull run, dare I say those words, but if we do, then you still have 6 months of narrative whereby, you know, these markets are led by narratives, these coins are led by narratives, and you have 6 months whereby this could potentially run. This is why I say I would not want to be an investor. Once this unlocks, of course, price will probably come back down, and generally over its lifespan, it doesn't have the greatest tokenomics. You can see over here fundamentally on this site called Optimism, daily transactions are up. It's reset everything. I'll need to, okay, let's just do it. Then you guys get a lesson over here of how to use it. So you click on Optimism, and then you just deselect the rest of them. Ethereum, deselect Avalanche, Aptos. Let's put on Arbitrum for a comparison. There you go. So Arbitrum is in the blue, Optimism is in the pink. You can see that Optimism daily active users now started to overtake the Arbitrum daily transactions is overtaken as well. And then importantly is the total value lock. It's been extremely low, but if this narrative starts to build steam, this will start to pick up very quickly. And then that creates a swing trading opportunity. So you need to be smart in these markets. You want to look for high sort of beta coins that are going to move stronger than Ethereum or move stronger than Bitcoin. This is kind of the type of research that you need to do as a trader. So that's what I'm watching over there. CZ says more FUD is coming. Ignore it. Dylan Leclerc, there he goes. Binance peg, so their BUSD stablecoin, and he says Binance issued a peg of the Paxos. That's how they who they work with to peg their stablecoin. And he says it was previously partially unbacked for periods of time, which Binance attributed towards operational delays. and he has a whole analysis. I mean, you can go to his page and have a deeper look into that, but a little bit of negative press that if that does unfold as something bigger in the future, regulators may come for someone like CZ and the BNB coin. So you just want to be careful with that. So Binance stablecoin wasn't always fully back, as per Bloomberg, making the mainstream media articles over there. Okay, Bitcoin on the lower time frames. Well, daily is not that low, but nevertheless, let's look at it over here. 100. This is the 100 moving average. You can see the way that price has interacted with this over this entire bear market. Pretty much set in our top, came down the 47, 48K. Most of the oscillators, the moving averages gave a little bit of a fake situation over here where it recaptured it and probably got a lot of people to go long and then broke back down. But every other time since then, you can see the interaction over here. Bear flag pushes into it, comes back down. Bear flag pushes into it, comes back down. This is also still a bear flag. I'll show you on another chart why it could look like a bear flag. But will we break this level? That is the question. And if so, how many days do we close above? There is a lot of resistance here. That's basically the message that I'm trying to show you. Once we get into this zone, this is where you want to start to become very, very careful with your long trades. And here it is. Here's the bear flags. You can see each time they basically become less and less aggressive. Smaller, I have shown this before. Look at the angle. Look at how sharply the bounces were going over here. Now smaller bounce. This bounce has also been reduced in terms of its angle. This one's reduced. This one's reduced. They're becoming flatter and flatter over time, and eventually will start to break above this 200-day moving average. 200-day moving average is an important one to watch. Let's zoom into this so you can get a closer look at those levels in relation to everything else I've shown you. So if you do look at this as a bear flag over here or a channel, at the moment you have resistance coming in 17,800. If price gets into that zone over there, it has the probability of rejecting in the same way that we weren't able to hold it over here. A spike above that level takes you to 18,900, and then you have the 200-day moving average coming in at 19,480, which is trending down with time. So all of this is resistance. Be careful on your longs, guys. The chart over here with the different cumulative volume deltas on spot, as well as the aggregate futures contracts, so the guys trading on USDT or USDC, continues to trend up. This does still have legs. I think the way that I would treat this, if I were trading this, if you are long, let's look at the 1 hour chart and I'll just finish off on that. I'm seeing this as level to level trading. Very, very simple. You do have this RSI stochastic, which is starting to cross back to the upside. What does that mean? That means that this target, which I gave yesterday, I can just move it over. Everything over here is still relevant. You can see the lines work perfectly, even though they weren't meant to be like that. It worked perfectly. Push up into that zone. This is the range that you're within. So you have mid-range at 16,959. Then you have the top of, or the mid-range of this whole range. Okay, so let me just make this clear. Okay, this is mid-range where my highlighter is. This is the range high. I've divided that into two ranges. Here you have the mid-range of that broader range, right? That also happens to line up with the 0.618 on the previous move that we had. So the golden ratio coming in at 17,592. That's why this is the first target. If price can get above this level over here, then I would start to look at trading this range. So sticking with this range over here, looking to trade up to 18,150. Failure to do that, and I would simply track this trend line over here. You can see I drew a very simple trend line. It's a dash line. A breakdown of that once we get into this zone. So I'll zoom in even further for you. Here's the zone. Let's make this big for you. There we go. Let's make that big. Let's make that a solid line. I would track it like this. This is for the low time frame traders. So once you approach the 0.618, which, as I said, is coming in over here, you have a very, very simple trend line. If you start to see a rejection taking place, so it's coming up, and maybe we deviate above, fail to hold that, and we break that trend line, I'm looking for shorts. I'll wait maybe for a small bounce. underside rejection. So testing that mid-range, reject off that mid-range, that's your trigger. Enter short, and I'll be looking to trade it straight back down to the bottom of the range again. That's the way that I'm looking at this, guys. I hope that helps. That brings us to the end of the show. Please make sure you give the video a like, hit the bell notification, and subscribe to the channel. Also, if you don't already have a exchange that you're trading on, feel free to use one of mine. There's a whole bunch of them over here. One of my favorite is definitely BYBIT because you get high sign-up bonuses. It's got huge liquidity. You lose nothing. It helps me. It's a win-win situation. That brings us to the end, guys. I have to run. I will see you all on the next show. Have an absolutely stellar day, and cheers for now.